Hello, I'm Robert and welcome to my channel where I talk about everything automated algorithmic trading or simply algo trading. Today we're going to continue my Learning Python series, the Jackrabbit Relay Edition. We're going to pick up where we left off from the last video and talk about the next step. In the last video I demonstrated how to actually go through and test historical data. This video is going to take that step and actually apply it to a live or rolling market. And we're going to specifically look for the pattern of the swing high, swing low, or swing low, swing high, depending upon what direction you're going. For the purposes of what is on the chart, we're looking at a swing low, which is the price has to be above the 200 period moving average, and the 20 period moving average has to be above the 200 period moving average. The blue line is our 20 period moving average, and the black line is our 200 period moving average. And the area we're going to be looking at for the swing low is an ABC pattern. And that is candle A, the candle that my mouse is on right now, has to have its closing price above candle B, but candle B's closing price has to be below candle C. So we have the A, B, C. Now the problem with this is it doesn't work out in practice by using the actual candle close. So what we have to use is the moving average. That is where we have to actually do the ABC test. We actually have to check the moving average itself, step by step, to meet that pattern. So let's get into the actual VPS and see this in numbers. Okay, we are in the VPS and we have the live numbers of the bot running. Now there's a lot here that's quite significant and we're going to really go over this. But let's actually get to the log entries that show how this works with the swing low. So now I have the log entry up right here, and we see we have a short low pattern. That is, the price is below the 200 period moving average. But in order to replicate what we saw on the screen, let's find a long low pattern. Okay, so now we have a long low pattern. That is, price is above the 200 period moving average and the 20 period moving average is above the 200 period moving average. And we see here with the verifications, this is the actual price, the 20 period moving average, the 200 period moving average, and then the distance or spread between the 20 period moving average and the 200 period moving average. We'll get to this later because this actually gives a lot of information. But for now, we're going to look at the 20 period moving average. Remember what I said, the ABC pattern. The first candle needs to be above the second candle, but the second candle needs to be below the third candle to meet that ABC pattern. And here we have it. 2907 is above 2899. That is below the 2902. So we have a V-shaped pattern in the market that we're looking for along with the moving averages. Now this isn't directly using a crossover technique, but it's using a particular pattern to look for the market in a particular state or situation. It gives us the opportunity to take technical analysis to a whole new level. And by doing this, we're searching for the swing low part, which is what this candle indicates, to the swing high part, which is just the exact opposite. That is an upside down V, where the A candle is below the B candle, but the B candle is above the C candle. And we see that here. 29.96, 30.01, and 29.94. We have that inverted B pattern. So in essence, if you buy on the swing low and you sell on the swing high, you're going to make your profit. Now when we're shorting, it's the same concept, but just the opposite of when you take a long position. So a swing low on a short is actually the upside down V pattern, because we want to get the price that's as close to the 200 period moving average. And then the price that's further away from the 200 period moving average will be our selling point, or our short close point. So we have the swing low, and here we see that the distance between the 20 period and the 200 period is going down. And now we're getting towards our long high. So if we were to use that particular pattern, short low, long high, we would make a significant profit. But this is just one of many. The rules we're using would cause us to close out at the crossover point, because we don't actually get a swing high. The market is going against us, so we would end up taking a loss here. One of the many factors you have to be aware of when you're looking at these kind of processes in a different way. You need to think about your entry and your exit and how you mitigate losses. In this case, the natural exit point is when the market does a crossover, because we have, in essence, gone opposite of what we should. So that's just one of many approaches. Now let's get into the code and actually talk about what this looks like. Now we are in the code, and you're going to see that a lot of what we've already done hasn't changed. In fact, the only thing that we have changed really is in the main function. So we're in the main, we get our arguments, we start our loop, we track the time. Now when we're moving from just historical data to live data, we need a way to process and make sure that we're not processing the same candles over and over. You could just sleep 1 minute on a 1 minute candle. But what I've chosen to do is, because this program can work on any time frame, and I didn't want to program every time frame into it for every single exchange that it supports, I chose to track the old time. And as I actually get the time itself, and I put it in a string, then I take a look at the time. If the old time is not none, meaning we've done this over more than one time, and the old time doesn't or equals the current time, then we just get out, go back up to the top, and do it again. Simple as that. We just wait. Now we can add a sleep function here, and we should, to be nice to the CPU. But that's how we have it right now. If we make it this far, meaning the old time is not equal to the new time, and the old time could potentially be none. Then we save the old time, and we begin processing. We get the 20 period moving average from the closing price. We get the 200 period moving average from the closing price, and then we check the crossover. The crossover is this last number here. How far away are the two bands? The larger the number it gets, the more distance. That's a critical point because now we have a way to actually look for a swing high, swing low in the distance between the two bands. And that could be another option to explore. The whole point of you actually going through the difficulties of tearing an indicator apart, piece by piece, is looking for these unusual situations that give you an edge nobody else has, or give you an edge very few people have. Remember, only 5% of all traders actually make money in the market. And that 5% are because they've looked at the market differently. So now that we have established our technical analysis part, let's actually get down into the part I described on the charts, the ABC approach. In Python, the last candle of a list is a -1, as we demonstrated in the last video. So the 0 index would be the imaginary real-time candle. So now we have our ABC pattern, and we are able to actually begin looking at it. If a row of closing price is greater than the 20 period moving average, or excuse me, it's greater than the 200 period moving average, and the 20 period moving average is greater than the 200 period moving average, then we have a long position. And now we check to see if we have that pattern. So if A of the 20 period moving average is less than B of the 20 period moving average, and B of the 20 period moving average is greater than C of the 20 period moving average, then we have a long high. That is, we have reached the top of the peak of the pattern. Conversely, if A of the 20 period moving average is greater than B of the 20 period moving average, and B of the 20 period moving average is less than C of the 20 period moving average, that is, we have a V shape. We are at the low point of the pattern. So if you buy at a low point and you sell on a high point, you have your profit. This is the long direction when price is above the 200 period moving average. That is, the market is moving upward. So now we do the same thing when the market is moving downward, but it is exact opposite of a long position. That is, price must be below the 200 period moving average, and the 20 period moving average must be below the 200 period moving average. Then our swing low must be the pattern of A is less than B, and B is greater than C. That is, B becomes the crown of the tip, or the point of the upside down V. So by using this approach, because we're shorting, we're exactly opposite of a long position. And then we look for the high point. The high point will be a V shape because it is the bottom of the short. So A will be greater than B, and B will be less than C. And that marks the high point of the process. Now, because we are using Jackrabbit Relay underneath of our own object, by what we defined above, with the relay variable inside of our technical analysis object. Let's go up and look at that. Right here, this is our gateway to Jackrabbit Relay. The benefit of this is anything encompassed inside of Jackrabbit Relay is accessible to us, including Jackrabbit Relay's logging facility. So we're able to actually use the normal logging facility that Jackrabbit Relay provides. And we are going to write out this information into a log file. This is the log file I demonstrated a few seconds ago, showing all the varying conditions. So through our object, through our indicators, we can use the full potential of what Relay has to offer on a full face value. And for Relay itself, the JR log reference is actually another class or another object, and write is a member of the logging object. So we have a layer of two different objects talking to one function within that cascade, or in the object-oriented world, inheritance. That is, the technical analysis object is inheriting all of the Jackrabbit Relay objects and methods for trading. Now we sleep, which lets the computer have a chance for the cycles to cool down so we're not overloading the CPU. And then we go back and we repeat the process. We wait until the candle actually changes and we get a new candle pattern, meaning we are 1 minute later or 5 minutes later or whatever we have defined on our time frame of the command line. And you can see here the results. Whereas up here, that spread between a 20 period and a 200 period is shrinking over time. That's important. That means the 20 period is getting closer to the 200 period. The market is going upwards. This is what an uptrend looks like in numeric form. But that is the principal component of why you need to focus on numerics within trading and algorithms. It gives you an edge you're not going to get on a chart. You're not actually going to see the actual distance between the 20 period and the 200 period easily. Through technical analysis and through what we've done through Python, we have a tool now we can actually look at. We can run analysis on. We can find out what the average gap is between a 20 and a 200 for a long and a short period market. And then we can use that information to build a trading process to help maximize our profitability. That is critical. That is existentially critical because you have a tool that isn't normally available to 90% of people trading Bitcoin. And that is what this market really is. This is the Bitcoin market. So through our analysis, through taking a look at historical data every minute, We can see the patterns, we can see the trends, we can see all of the various things that a chart shows you visually. But we can see it in the way that the computer is able to analyze it algorithmically. And then we can actually take that process even further and look for specific patterns that exist in the market, and then we are able to capitalize on that process. Now, this program will be in the supplemental repository of the Jackrabbit Relay system. If you want to be able to download it, just sponsor Jackrabbit Relay or subscribe to my Patreon. If you have any questions about this program, please leave a comment below. Questions are critical. If you don't understand the basic steps here, you're not going to be able to understand the more advanced steps as we get into more deeper analysis and tearing down other indicators. The moving average is the basis of just about everything in trading. And looking at what we've done here, candlestick analysis, is just another layer upon how we look at the market. So please hit that like button. Help me out with the YouTube algorithm and growing the channel. Ask any questions if you have them. Thank you for watching, and until next time.